Good afternoon, everybody. This is your market update for Friday, April 28th, ready for the weekend. But first, stock market this morning opening lower across the board initially with a Dow down 70 points, S&P 500 down 7. However, quickly reversed course on the back of continued strong corporate earnings reports, as well as a favorable inflation report and the PCE report that we've been talking about this week. Currently, the Dow is up 178 points, NASDAQ up 43, S&P 500 up 23. Mortgage-backed securities rallied yesterday in the afternoon, closing off their worst levels of the day, but still down 11 basis points with that PCE report that came out this morning showing inflation that continues to cool. Mortgage-backed securities are rallying on the day, opened up 22 basis points. Last I looked a few moments ago was up 27 basis points, still hitting pretty solid level of resistance at the 100-day moving average. Did break above that briefly, but for the most part keeps getting rejected lower. We'll see if we get a late afternoon rally that will enable us to close above that level of resistance. And that may mean continued improvement in interest rates into next week. We'll wait and see. Nonetheless, is a good day in mortgage-backed security market and a good day for interest rates as well. Mentioned the PCE report, just a few highlights of that. When you look at the numbers for the PCE report for March, it showed that inflation increased month over month by 0.1%, which was lower than the market was anticipating, which was 0.3%. And if you look at what that means year over year, when you compare March of 2022 to March of 2023, inflation actually dropped by 0.9%, which puts the current inflation rate at 4.2%. The market was anticipating a number of 4.5%. So overall, favorable inflation report. The numbers were a little bit less than what the market was anticipating for the most part, with a couple elements of that report being pretty much in line with what the market was expecting. We do have a good amount of information coming out next week that could impact the market, and most of that has to do with labor and employment figures. Remember, last month, we basically had some employment reports that showed that the labor market was actually loosening a bit. It wasn't so tight, and that's what the Federal Reserve has been looking at in addition to inflation, is they want the labor market to cool a little bit as well. So if the reports next week support that, then we could see some continued improvement in interest rates as well. We'll wait and see. Hope that you all have a great weekend, and I will see you on Monday.